Hello, good afternoon, everybody. Welcome to the ADP webinar on Union Budget 2016-17, All That Matters to You. This webinar we are doing after a couple of months break, and we thought there cannot be a better topic than discussing about the Union Budget that was released last week. So over the last 1 week, you would have seen various analysis by different experts across the country. On this webinar, we tried to be a little more specific to the business that matters to us, your employees. And that's where our expert, Rohini Kumari, who's going to be the speaker for today's webinar, is going to concentrate on. I am Suvish, and I'll be your host for today's session. Before we get into the details of the webinar, let's just get some basics right. On the right side of your screen, you can see a window where you can raise your questions that you may have during the webinar. At the end of the webinar, we will take up those questions, and Roni will try to answer them as many as possible. For the questions that goes unanswered due to shortage of time, she will try to email the responses to you as soon as possible. We are recording this session, and once the video is processed by our design team, we will send the video across to all of you who have registered. So without wasting much time, let me just give you a short overview of what we are going to talk during the webinar. We saw the Union Budget of 2016, which was presented by our Honorable Finance Minister, Shri Arun Jaitley. This was his third Union Budget under this new government. So it was presented on the 29th of February 2016, this being the leap year. It was presented on the 29th, and it was presented under very uncertain times in the global macroeconomic landscape. So you might have read the news and heard in the news the economies in the world, how they are trending, with major slowdown happening in China and other parts of the world. So amidst all that, it was difficult for the government to present a budget that was forward looking to the best of the interest of the country. One unpleasant surprise that came in out of the budget was on the personal tax front, where it was decided to partly tax the retirement benefits at the time individuals seek to withdraw from provident and superannuation funds. Now, this is quite important from individuals' perspective and also from ADP's perspective, because we have our trust management services as part of the services portfolio that we have. So the tax rates, as per the rollout on the budget, it depends upon the dividends that is earned towards the end. So it varies with the dividends that you earn. However, government has been approached to revoke this decision, as this is going to have adverse effect to a lot of taxpayers in the country. Now, one of the other striking points of this budget was a lot of emphasis have been given to the farming community. So while 13 other cesses earlier levied by various ministries have been abolished, an additional Krishi Kalyan cess of 0.5% will be applicable on all the taxable services. On the update of Indian economy per se, Indian economy continues to be on a high growth trajectory owing to a proactive measure taken by the government. As per the advanced estimates of the government, GDP growth in FY16 has been projected at 7.6%. This data is from the economic survey, which was done in 2015-16 time period. As per inflation rate has also been lower level owing to reduced oil prices across the globe. So the inflation rate was looming around 5.4%, which was an indication of a stronger economy forward. So going forward, Rohini will be discussing on few of the topics that might be of a concern for you and your employees in general. There were some changes done in the tax slab and income taxes, which she will be discussing. Moving further, she will discuss on the house property, if there are any changes. Then the topic will move on to social benefits reforms. As you might have noticed on the budget, there were a few reforms around social benefits, which will be taken up by Rohini later. Then we have few other updates that might be of interest to you and your employees, which you can always ask at the last round, which is the Q&A round. Now, we hope that you will have a very informative session and interactive as well. So you please use the window that you see on the right hand side for getting all the updates, or asking if you want to ask any questions, please use that window. Moving on, I'll invite Rohini to take this forward and enlighten our audience with the other topics. Rohini, over.
Hello all, I'm Rohini from ADP. Today I'm gonna present some highlights on budget which I have collated that majorly will impact our payroll and individual taxation. So first of all, the direct tax slab, there has been no changes in direct tax slab for the financial year. So individual below 60 years still non-taxable limit is 2.5 lakhs. For senior citizen above 60 and below 80 years, the income tax limit still is 3 lakhs. And for very senior citizen which are above 80 years, the income tax exemption maximum limit is 5 lakh of rupees. The changes which have on the direct tax rates are a tax rebate of 5,000 under section 87A has been provided to the people who has an annual income of rupees 5 lakh and less than that. This 5,000 was earlier 2,000. So 3,000 benefit has been given to small taxpayers whose income is less than 5 lakhs. Education cess still stands at 3%. So education has 2% and higher education cess has 1%. So in all 3%. Whereas the surcharge has been increased to 15% for all the people whose taxable income is over and above 1 crore. Earlier the surcharge rate was 12%. So from here we can draw a conclusion that there are minor benefits for small taxpayers below 5 lakh of income, and there has been a incremental 2% increase in tax payment due to surcharge rate increase for higher rich taxpayers. Now going through income tax other minor amendments which were introduced in this financial budget. So 80GG section, the SSCs who don't have an HRA component in their salary structure, and also who doesn't have a house property in his name, his spouse name, or a minor child in that area, then he can claim rent payment made under section 80GG. Earlier the exemption limit was 2,000 rupees only per month, or 25% of his total income for the year, whichever is lower. So now this has been increased to 5,000 per month. So instead of 24,000 per annum, the SSC who's complying these conditions can claim rent payment deduction of 60,000 under section 80GG. The second is TDS on PF withdrawal. Under section 192A, earlier the condition was if the person withdraws an amount of PF amount of more than 30,000, then TDS would be applicable at the rate of 10%. Now this has been changed to 50,000 rupees. So for after this amendment, any person withdrawing a PF contribution of more than 50,000 in a year, the tax would be applied at 10%. The 30,000 has been replaced by 50,000 now. This overall tax concession has never majorly not impacted. So the tax deduction summary remains as what was given last year. A normal person, a general taxpayer, can claim up to 4,44,200 of tax exemption, which was already given last year. It remains the same. So these are the few details where you can claim your tax deduction this year also. So ATC still stands at 1.5 lakh. ATCCD, the National Pension Scheme Additional Section ATCCD 1B, which was introduced 50,000. which was a last in the last budget it was introduced to 50,000, which remains the same. And then interest on self-occupied house property. So under section 24, it still remains at 2 lakh. And deduction under 80D on health insurance premium still remains as 25,000. Additional 3,000 if the person who's claiming is over 60 years. Exemption under transport allowances is still 19,200. That is 1,600 per month. So in all, the tax deduction summary still stands at 4,44,200 for major chunk of our taxpayers this year also.
So, Rohini, let me ask a few questions in middle so that we make the session conversational. Was there any change in this particular slab from what it was last year?
Normally, there hasn't been any change in this one. Due to additional 80GG, the people who are not falling under HRA exemption, they can have an additional benefit of 60,000 rupees per annum. Also, who are planning to withdraw their PF, they will have a impact if they're withdrawing more than 50,000, as they have a 20,000 extra excess gap this time for TDS applicability.
Okay. Okay. Thank you.
Yeah. So now let's focus on house property and home loan deduction amendments. So section 24 always used to talk about interest on home loans. So there was a condition where a person can claim up to 2 lakhs of interest payment benefit for a self-occupied property only if he satisfies a few conditions. First, if the loan was taken after 1st of April 1999. Second, if the construction was complete within 5 years from the end of financial year in which the capital was borrowed. Third, so these two conditions has to be satisfied. Then only the person can claim a self-occupied house property interest up to 2 lakhs, or else if he doesn't comply with either of these conditions, then it will directly drop to 30,000 rupees. So now there has been changed the 3 years time bracket to complete the acquisition or the construction has been changed to 5 years. So a person who's taking a loan and completing the construction within 5 years also, then he can claim up to 2 lakhs of interest benefit deduction. So now that has been changed to 5 years in simple words. Second point is reintroduction of Section 80EE. We all know Section 80EE was introduced 2 years back and it was discontinued just last year. Finance Minister has reintroduced this from this year onward. So the individual can claim an additional interest of rupees 50,000 if if he satisfies these four conditions. First condition is he should be first time home borrower. So the assessee shouldn't own any house property or on the loan sanction date. Second, the loan sanction day should be within 1st of April 2016 to March 2017. The third is loan sanction amount should not exceed more than 35 lakh. The fourth point is value of house property doesn't exceed 50 lakhs. So only if you satisfy these all four conditions, you can have an additional claim of 50,000 rupees. So this is a reintroduction of a section for the benefit of self-occupied home loaners. That's for the deduction claim point of view. Now let me bring to you to focus on minor changes which was made in house property sections. So the first, there were three different sections. Section 25A for unreceived rent, 25AA for unrealized rent, and 25B for 30% deduction on deemed income from house property. These three sections has been scrapped out and a consolidated section of 25A was introduced in this budget. So this section 25A is not different from 25A, 25AA and 25B. The only thing which is changes is instead of three section, now we have consolidated one section. So 25 section 25A1 states that any amount of arrear of rent received from tenant or unrealized rent realized from tenant as the case may be, by an assessee shall be deemed to be an income from house property and shall be included in the total income of that assessee. The simple means if there is an arrear of rent received this year or there was any unrealized rent for that period, then it would be deemed income for the person for this year, whether he is the owner of that property in this year or not. And section 25(2) states that 30% of deduction, standard deduction is allowed from this deemed income. So this is just for a conveyance, which was simplified. The act was simplified for us, but there's no major change or impact or our payroll for this. So now let's go through social reforms made in income tax. First, we will talk about national pension scheme. There were the first reform was tax exemption allowed. So earlier, any withdrawal of NPS at the time of retirement was 100% taxable, which is now reduced to 60% being taxable and 40% being tax exempt. So any withdrawal of NPS at the time of retirement, 40% would be non-taxable and 60% would be taxable. Second, NPS amount received by nominee. Any amount received by the nominee in case of death at the time of closure of this NPS account would be tax exempted in the hands of nominee. So the nominee doesn't have to pay it. Earlier it was, this is just a clarity which was given to reduce the burden of nominees from paying NPS taxation in case of death of the concerned person. The second social benefit is employee pension scheme. The government will pay a contribution of 8.33 for the new employees enrolling in EPFO for the first year of their employment, only if these are first time employees, so they have enrolled in EPS scheme for the first time, and the salary paid is less than 15,000. So the government will contribute, in simpler terms, the government will contribute 8.33 EPS deduction or from their side instead of the employer for the first 3 years if the below two conditions are complied with. This will encourage the employers to recruit unemployed person and create new jobs in all the sectors. So this is just a benefit to bring back all the freshers in the employment. The third and the most talked social benefit reform was Employee Provident Fund and Superannuation Fund. So the first was employer contribution to Provident Fund and Superannuation Funds. The monetary limit of contribution of employer in recognized provident and superannuation fund is restricted to 1.5 lakh per annum for availing tax benefit. Earlier, the benefit was till 12%. So employer contributing to PF up to 12% was tax exempt. Now the limit is restricted to 1.5 lakh only. So anything over and above 1.5 lakh and even uh, around or below 12% of the basic, it would be taxable as per this what do you say, as per the budget speech. Withdrawal of provident fund and superannuation fund. So along with NPS, finance minister has also stated that withdrawal up to 40% of corpus of provident fund at the time of retirement would be tax exempt and 60% would be taxable. So earlier PF withdrawal at the time of retirement was non-taxable. So it was 100% exempt from tax. Now it has been brought into 60% of being taxed and 40% being exempt. To add on that further, any contribution made up to 31st March, so any contribution and withdrawal of those accumulated balances up to 31st March 2016 will continue to be fully exempt from tax. However, any further withdrawal from contribution made after 1st of April 2016 will be taxed at the rate of 60%. So any contribution, any balances withdrawal for out of balances from up to 31st March is 100% non-taxable still. Also, all the social, so this is much talked social reform right now. It's under discussion, it's under revocation. Most of the people are asking to withdraw this policy. And let's see, we are all awaiting for official notification uh, out of ministries to highlight in what's gonna happen for all the social reform benefits. Now I'm gonna talk about the other updates. These changes won't impact payroll process directly, but I have brought you all the changes which I think may impact you or impact the general public on indirect basis. The first one is a service tax exemption. So annuity a service provided by NPS and service provided by EPFO to employees are exempt from service tax. So they won't be liable to any service tax payment. Service tax rate change increase, as my colleague stated, that additional Krishi Kalyan cess at the rate of 0.5% would be added to all the taxable services from 1st of June 2016. So there is a service tax rate change increase. Non-resident Indians. So non-resident Indians who don't have PAN right now are taxed at a higher rate of tax, that is at 40%. But after this, to rationalize all the taxation scheme for NRIs, Finance Minister has stated that even if non-resident Indian doesn't have a PAN, but he may provide all the relevant alternative documents as may be prescribed, then the higher rate won't apply. So he would be taxed at a normal slab rate. This has the alternative documents what are required by these non-resident Indians are still not specified. We are awaiting official confirmation and all the notification providing all the details. Once we get it, we're gonna circulate it to you all through newsletters or some another webinars maybe. The last is corporate tax. So companies with turnover not exceeding 5 crores in the financial year ending March 2015, the corporate tax has been reduced to 29% plus surcharge and cess. Also to add on, new manufacturing companies which are incorporated on or after 1st of March 2016 are proposed to be given an option to be taxed at 25% plus surcharge and cess instead of at 30%, provided they don't claim any profit linked or investment linked deduction and do not avail of investment allowances and accelerated depreciation. To highlight a few more corporate taxation changes, accelerated depreciation was reduced to maximum of 40% from 1st April 2017. Further, to motivate startups, it's proposed that 100% deduction of profit for 3 years out of 5 years for startup during April 16 to March 17, March 19, sorry. Starters Make in India initiative has been motivated by giving 100% profit deductions for the first 3 years out of 5 years. So hoping there will be many startups and that will help our economic growth. With all these details and updates, I end my webinar and thank you.
Thank you very much, Rohini. I hope our listeners found this webinar and the information uh, on the slides useful enough. So now let's take some questions that have come across. Yeah, so one of the question the people had asked was, we'll be sharing the slide as soon as we process the video. As our previous webinars, we process the video and then upload it on YouTube and send the YouTube link to everybody. We'll continue to do the same, which will have the slides as well. So one of the question that we can see here is around 80 GG, Rohini, and the question was if it is beneficial enough for the taxpayers in general. So what would be your opinion around that?
So ADGG are only applicable for all the people who doesn't have an HRA in their salary structure, which right now is a rare norms in Indian market.
Okay.
So most of the companies do provide HRA to all their employees. So that's why it will benefit to the people who don't have an HRA. So yes, it's a good move.
Okay, thank you, Rohi. Moving to the next question. The news that apparently was being shown that if the EPS action is EPF part is removed, that there was apparently some news. So do you want to highlight on that?
Yeah, Economic Times speak about the revocation of EPF. What do you say, 40%, 60% taxation. But I'm still waiting for official notification from government so that I can claim anything on that one. So right now, yeah, Economic Times have a write-up stating that it was revoked back. But let's wait for an official notification.
Okay, so it's another question was around withdrawal of principal or interest portion. I think it is again with respect to
Yeah,
that.
notification, yes.
Yes. So
We are waiting for all the details. We are waiting for no official notification to answer these sets of questions.
So yeah, I think people are more concerned about the EPF tax being revoked. So we are yet to wait from a government agency on notification, right? So
Yeah.
I think that's the reason why we did include after that. So one of the question was regarding EPS. If employees will join, then government will pay 8.33%. The question was seems to be not very clear, but
What I understand is the person is asking whether EPS will be paid by government if the employee joins the company.
okay.
So having that person in mind, so yes, the EPS would be paid by the government on behalf of employers. If the new people who are enrolling in EPS joins such company for the first 3 years.
Okay. So this changes on these changes on EPFO, will that impact employer taxpayers?
Uh, yes, because the employer tax has been restricted to 1.5 lakhs. So let's see. I mean, let's wait for the official confirmation. Normally, right now, reading all the finance bill and the speech and all the explanatory note, yes, it will impact the employer tax payment also.
Another question is from when this is going to be effective about government will pay employees contribution.
Uh, let's let the finance bill be passed and signed by president. We are waiting, and they will provide all the dates for applicability of EPS employee contribution paid by government. So let's wait for the bill to be passed, and we will get all the dates.
I think once we get the date, we'll anyways make that communication through our
Yeah,
newsletters and
sure,
other
sure.
means, right? So other question was about, I think the impact of this on startups. Would you want to take this question?
So startups basically for startup initiative to provide a better forum for all the startups, the government have provided 3 out of 5 years of 100% tax reduction. So the profit would be stated as nil for any of the 3 years out of 5 years. So EPS, EPF, or whatever comes out of this would be taken for the startups as well. So, with respect to TDS and everything, I have provided you all the details. If you have anything further for the startup query, either you can provide your questions, which I can reply right now if we have time, or else I can reply you back as soon as possible.
Okay, moving on. So regarding this EPS thing, how's this gonna impact a private sector company point of view?
See, EPS things are paid by private as well as
Public, right?
public
Yeah.
in the same way. So if the private company takes a new fresher, say Mr. X is a fresher, I am a private sector company, I hired this Mr. X and I notified government that he's the person who is a new fresher. He wasn't. I'm enrolling in EPS for the first time for this Mr. X, and he's also with the salary of less than 15,000, then the government will anyways pay the first 3 years of EPS contribution.
Okay. Another question we have is we'll take up two to three more questions before closing out this session. How government will contribute 8.33% of new employees enrolling in EPFO? Is there any process to inform government about new joinees and their salary? When mentioned salary is 15,000 and below. The other part of the question is if this particular thing is applicable only for the CTC or the gross salary.
Okay. To answer that, what is the process of informing government? Right now, the process has been not been defined, but what I understand is whenever we enroll a new person in EPS, they will directly have been tagged to the government. Once I enroll Mr. X in EPS authority scheme, then it will be directly hitting a government portal where they would get the information that a new person has been enrolled in EPS and the contribution has to be made from government side. The second question, because Provident Fund Act talks 15, this 15,000 is only basic. So taking that as a base, I say the 15,000 of salary limit is, I think, not CTC gross salary, it would be the basic salary.
Okay, okay. Thanks, Rohini. The second last question by one of our attendees is if the PF withdrawal allowed on both contributions or only employee contributions? I think it's both for employer and employee if they can withdraw.
So this 40% and 60%, what are you talking about the withdrawal of PF? Uh, Again, I will say the notification hasn't come, but right now, as after reading the finance bill and the explanatory note, it appears that this 40 and 60 bifurcation will be for both employee and employer. So there won't be any bifurcation between employee contribution after 1st of April 2016 and employer contribution. It would be consolidated 40% non-taxable and 60% taxable.
Okay, the last question for the hour is exemption of transport allowance is same as conveyance allowance, which is earlier rupees 50,000 per annum.
I'm not very sure where you got the 15,000 per annum because as earlier, I mean, in the last budget, conveyance allowances was increased from 800 to 1600. That's why it comes to 19,200 per annum. What I understand from your question is conveyance allowance and transport allowance, you're getting confused. Conveyance allowances are defined by section 1014, which is already defined. Transport allowances or any name, other name called for providing allowances for traveling for the employees can be 15,000, can be 30,000 depending on the HR policy and the company policy. So 15, I'm not very sure which 15,000 are you talking about because section 1014 describes conveyance allowances as to be till 1,600 per month.
Okay. So I think it's about time to wrap up this discussion. We have answered most of the questions, but looks like there are more questions that are following up. So I would request all our attendees to email us your queries. You can email to the same ID that you got registration links from. That's the mail ID which we are using for the webinar. Okay, I think before we close, we have got one question popping up, so we can definitely take this question. Some companies pay both. The question is, some companies pay both conveyance and travel allowance. Is it right?
So double benefit for one expenses is the wrong thing. Uh, but if the company can validate why you're giving two different allowances for the same thing, see, conveyance allowance and travel allowances, or the allowances provided to an employee for traveling for the traveling expenses to and fro between home and company. So if the company can validate that yes, these two allowances what we are giving is genuine and really needed by the employee, then why not? It's very valid and good. Let's go ahead and give both. So if not, then either of can be given.
Okay, thank you, Rohini. I think our questions, most of the questions have been answered. And as I mentioned, we look forward to your questions later in the day if there are any. But we believe that this webinar was useful for all of you. So, Roni, do you have anything to conclude as part of the budget?
So for me, with little for small and mid-sized income earners, current budget implementation would help strengthen the base of all industrial boom, according to me, and then it's agriculture with higher GDPs, lower inflation rate. Let's hope for the best for the next year.
Yeah, I think yeah, that's what we can all do, and I think we'll hear more from the government on this
EPF thing, yeah.
EPF revoke if the news whatever we are getting, if that is genuine information. But apart from that, I would like to take this opportunity also to wish all our women attendees for a very happy Women's Day, International Women's Day. Enjoy your day. Thank you again for taking time to attend this webinar. It was a pleasure having you all here. We will continue our webinars from next month onwards. Next month we are looking at having a webinar on trust management. We see that as a we're seeing that as a challenge across the country, both from knowledge and skill perspective and also from management perspective. So ADP has been doing trust management for all the four major trusts, and we would like to bring our expert who was a regular webinar presenter last year. He will come. He has agreed to host this webinar next month on trust management. Looking forward to participation from all of you. We'll share the list. We'll share the link to register for the webinar in the coming weeks. So with that, thank you very much for attending this webinar. You all have a good day. We'll be sharing the presentation after the recording is processed on the YouTube. This video will have both the audio and the presentation embedded into it.